Artificial intelligence, or AI, has been rocking the world for the past few months. All over YouTube, people are looking for ways to trade and make money using AI-based trading strategies. There are a few AI-based indicators on TradingView, and in this video, we're gonna review one of them. We will also create a trading strategy around that indicator, and we'll also backtest it to see how it would have performed throughout last year. Well, enough talk. Let's get into it.
I have a question.
Oh, it's you again. What's the question, Wojak?
What's this artificial intelligence indicator, and where can I find it?
Well, I was gonna tell you everything. You didn't have to ask. But yeah, the AI indicator is called Machine Learning KNN-based strategy, and you're gonna find it on TradingView. To add it, click here, then type in Machine Learning, and select this one by Capissimo. For those of you not familiar with KNN, it stands for K nearest neighbors. It's a machine learning algorithm that can help predict when to buy or sell stocks based on similar patterns from the past. It looks at historical stock data and then finds other times in the past when the stock behaved in a similar way. For example, let's say you're trying to decide whether to buy or sell a certain stock. KNN would look at the past instances where the stock behaved in a similar way and analyze what happened next. If the stock usually went up in similar situations, KNN would suggest that you buy that stock. Conversely, if the stock usually went down in similar situations, KNN would suggest that you sell that stock. So with this indicator, these blue labels are gonna be our buy signals, and these red labels are gonna be our sell signals. Now, looking at the settings of this indicator, we can see that these labels have varying levels of opacity. The higher the opacity of a label, the more accurate the prediction is going to be. Even though this indicator uses machine learning to produce these buy and sell signals, that doesn't mean that it's never wrong. There has never been and there will never be an indicator or trading strategy that never loses a trade. Losses in trading are inevitable. So we're gonna add two more indicators to the chart to minimize some of the bad signals produced by this indicator and reduce losses when trading live. Speaking of live trading, what broker do you guys use to trade? Personally, I use Henko Trade. As you can see here, this is my trading history. I mainly scalp gold, and up here you can see that it's a live account. The reason why I love Henko Trade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is the lowest it can go. For those of you that love high leverage, Henko Trade offers up to 500x leverage. This basically means that my $1,000 deposit could have the buying power of $500,000, which is really insane. And if that's not enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $100, they're going to give you a bonus of $100, so you'll have $200 to trade with. To get access to the bonus, as well as all the other perks, sign up to Henko Trade using the link in the description of this video. Now, back to the video. The second indicator is the famous moving average, this one that's under technicals. The third indicator is called Money Flow Index. Select this one by Dreams Defined. Then double-click on the moving average and change the length to 60. Then on the Style tab, change the color to whatever you want. Next, double-click on the Money Flow Index. Then on the Inputs tab, change the oversold value to 30 and the overbought value to 70. On the Style tab, change the plot color to white. Then change the overbought value to 70 and the oversold value to 30. Now, this moving average is going to be used as a trend filter. When the market is trading above it, that would be considered a bullish trend, but whenever the market is trading below it, that would be considered a bearish trend. The Money Flow Index will be used to determine if the market is overbought or oversold. When it prints a red dot like this, that would mean that the market is overbought and we should be looking to take only short trades. But whenever it prints a green dot like this, that would mean that the market is oversold and that we should only be looking to take long trades. As simple as that. Now let's go over the conditions for entering trades. To enter a long trade, first, the market should be trading above the moving average to indicate that it's in a bullish trend. Second, the KNN indicator should print a buy signal under a green candle. That's going to be indicated by a blue upward arrow like this one. At the time the buy signal is printed, the money flow oscillator, this white line, should be within the transition zone, this gray area in between the 40 level and the 60 level. The third condition is that we want the most recent label on the money flow index to be a green dot, like this one. This basically indicates that the market was recently oversold in an uptrend and therefore a higher probability of trend continuation. All the entry conditions are met on this candle, so we're gonna enter a long trade. We're gonna set our stop loss below the most recent swing low, and for the take profit, we're gonna set it at 2 times the risk. We let this trade run, and full TP. Now here's another example. As you can see here, the market was trading above the moving average. Then the KNN indicator printed a buy signal under a green candle. At the same time, the money flow oscillator was within the transition zone, above the 40 level and below the 60 level. Lastly, we see that the most recent label on the money flow index was an oversold label, this green dot. If you like this video so far, take a second and hit that like button below. Now, you may be asking yourself,
but what are the conditions for entering a short trade?
Well, you basically just have to do the opposite of everything we did for a long trade. Here's what I mean. First, the market should be trading below the moving average to indicate that it's in a bearish trend. Second, the KNN indicator should print a sell signal under a red candle. That's going to be indicated by a red downward arrow like this one. At the time the signal is printed, the money flow oscillator, this white line, should be within the transition zone, below the 60 level and above the 40 level. The third condition is that we want the most recent label on the money flow index to be a red dot, like this one. This basically indicates that the market was recently overbought in a downtrend and therefore a higher probability of trend continuation. All the entry conditions are met on this candle, so we're gonna enter a short trade. We're gonna set our stop loss above the most recent swing high, which is this one right here. For the take profit, we're gonna set it at 2 times the risk. We let this trade run, and full TP. Now, as you can see, this is a super simple trading strategy. For my backtesting, I only did it for 1 year, that is last year, and the numbers are pretty interesting. Also, the backtesting was done on the 1 hour time frame of GBP/JPY. Here's a sped up video of all the trades taken for the entire 1 year period. After 32 trades, we see that the win rate of this strategy was 56%, which is decent, especially considering the 1-to-2 risk-to-reward ratio. It had a great profit factor of 2.57, 8 consecutive wins against 4 consecutive losses, and a maximum drawdown of 7.76%. The gain on the account was 52% over a backtesting period of 12 months. This basically means if you traded using $1,000, this is what you would have made. But let's say you traded using a $500K prop funded account, then you would have made a whopping $263,000, which is what you saw on the title of this video. So as you can see, trading using a small account could be okay, but if you want to make really substantial amounts of money, then having a big trading account is the way to go. Bear in mind that this backtest was done on only 32 trades, which is definitely not enough to guarantee future results. If you want to use this particular strategy, be sure to do extensive backtesting and forward testing and customize it to your liking so you can have as much confidence as possible when trading with it. Experts recommend backtesting be done with at least 300 trades, just so you know. That's been it for this video. Hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching, and I'll see you guys next time.